Ordinary and necessary business expenses. Okay, so we did talk about this a little bit when we talked about educator expenses. Remember, those expenses had to be ordinary and necessary as well. Do you guys remember what the definition of ordinary and necessary was? Do you guys recall? No? Nobody remembers? Well, business expenses to be deductible also have to be ordinary and necessary. Ordinary and necessary, not ordinary or necessary. So it is an and. So ordinary means customary or usual in the taxpayer's particular business. Okay, so let's go back to my pie making business. I buy QuickBooks so that I can keep track of my income and expenses from my business. Now, QuickBooks is accounting software. Doesn't really have anything to do with pie making. However, it does have to do with keeping track of your income and expenses for any business, right? So that would be an ordinary and necessary expense for you to have QuickBooks. Let's say that I'm still making pies and I buy, let's see, I need some sort of, I also really like playing FIFA. So I get an Xbox and I buy FIFA 23, which just came out apparently. Yes, my children owe me money for their purchase of FIFA 23. So I buy it so that, while I'm waiting for those pies to bake, I'm just sitting there, right? So I play some FIFA while I'm waiting for my pies to bake. Well, the Xbox is not an ordinary necessary expense, and FIFA is not an ordinary necessary expense for making pies, right? So that expense has to be ordinary, customary, or usual in my business. An oven would be customary or usual in the pie making business. Flour, sugar, fruit, all of that stuff, all of those items that you would ordinarily purchase to bake pies. Advertising as well. If I'm in it for a profit, advertising is an ordinary expense, right? I do it in order to make more money. And if I make money, the IRS makes money, right? So that's ordinary. Necessary doesn't mean that you can't live without it. It means that it is helpful in your business. So if I'm making pies and I've got, let's say, I'm trying to think of an example here. I don't know, there's some crimping tool that I want. I want to make some fancy designs on my pies. And so I'm going to get some special tool. I don't know if there are special tools for making fancy designs, but let's just say there are. I'm going to get some special tool that costs me $300 to make those fancy designs. Now, are those fancy designs necessary for making pies? No, you can make a perfectly good pie without making it look fancy, right? Probably has not a whole lot to do with the taste, but if I do that, I can make more money off of my pies. People will pay me more because they're not only tasty, they're great to look at as well. So I get this fancy tool. Now, it's not necessary. It's not required. However, it is helpful, right? It helps me to sell my pies. And it helps me, maybe it makes my life easier than having to do it all by hand, right? So necessary would be that it's not essential, it's not required. If you think about required, with every business, it would be really difficult to justify pretty much any charge, right? But it does help to make your life easier. We've got an example here. Minato owns a successful landscaping business and is in the 35% tax bracket. So there's also, okay, I need to back up because this example talks about the third part, which is not in the tax code, but it's something that the courts have decided. The expense also has to be reasonable in amount, okay? If that QuickBooks software that I buy, which is ordinary and necessary, but I buy it from a friend of mine who is really in need of cash, and I pay $3,000 for it. And $3,000 is an awful lot for QuickBooks. I think you really should be. Of course, they don't even make the desktop version anymore, do they? When they made the desktop version, $300 would be about tops that you would pay for it. But I pay him $3,000. That's, I'm really trying to give him some money, and then I get a deduction for it. It's sort of a way to work around all of that, to take advantage of the system. Well, $3,000 is not reasonable. So the IRS would not consider that to be a reasonable expense. So, and that, again, that reasonable is not in the tax code, but it's something that the courts have determined. But it also has to be reasonable. Example here, Minato owns a successful landscaping business in the 35% tax bracket. All right, so he's in the top tax bracket, 35%. Well, almost in the top tax bracket. He employs his 17-year-old son, Brian. There you go, Brian. As a laborer to reduce his taxable income and to provide money to Brian for college in the fall. So Brian's probably not really doing a whole lot of work actually, but he's trying to, the dad is trying to get a tax deduction for money that he would ordinarily just be giving to his son, right? Brian most likely is in a lower tax bracket. It's also a way to shift income from a higher tax bracket to a lower tax bracket. Because think about this, if it's let's say it's $10,000. So the dad pays $10,000, 35% tax bracket. Tax savings, what, $3,500. He just reduced his taxes by $3,500. He gives this to Brian, who is in the 12% tax bracket. $10,000. Brian pays $1,200 in tax. Between the two of them, they've saved money, right? Between the two of them, if you net these two amounts, they have saved, what is it, $2,300 tax savings. Okay, but it's not completely on the up and up. Now, if Dad was actually paying Brian at a market rate, that would be fine. And Brian was actually doing the labor. That's not a problem. They can do that. However, he's paying Brian $25 an hour for a job that usually pays $10 an hour. Paying him too much. Therefore, that $25 an hour is unreasonable in amount. That extra $15 an hour would be disallowed. He would not be able, that means Dad would not be able to deduct it. Brian would still have to pay tax on it though, right? So they've got to pay it at the market rate. This here explains, the blue part, Tax Your Brain, explains this tax savings. Okay. Income shifting. Questions? Ordinary, necessary, reasonable. Okay, those are the three requirements for any business expense. All right, now we get into the fun part. Depreciation.